Nice to meet you. Let me know if you can hear me in the chat. Fantastic. Thank you, Mo. Finn. Hi, Finn. Welcome, Finn. Welcome, Mo. Well, again, my name's Aaron Morrow. We're using a new streaming platform service that actually has a lot more robust features for our webinars and our YouTube lives that we actually host every Friday on my YouTube channel. So we're just working out some of the kinks for the webinars. So thank you for clarifying that. But yeah, thanks. Yeah, so there's no unlike Zoom, we used to use Zoom and it had a waiting room, and that's just the only downside. There's no waiting room on this new platform we're using, but there's a lot of positives that outweigh just that one negative. So that's why I started this. We're gonna wait a few more minutes to let all the other people into the room. But yeah, anyone that's here, Mo or Finn, why don't you just drop a comment in the chat? Let me know what you're here for, maybe what you're excited about to learn about most about the home buying process, maybe where you're looking. Most people that are joining this seminar, they're looking either in King, Pierce, or Snohomish counties. So would love to hear a little bit about what you're looking for in your home buying goals. But if you're shy, that's okay, but would love to hear a little bit from you. Got a few more people joining. A few more people joining in. Okay, yeah, Mo says not sure what to expect. Yeah, that's cool, Mo. Well, we're going to cover a lot of things. Primarily, we're going to be covering some of the biggest tips that you'd want to know when buying a home, specifically in the greater Seattle area. In these 3 counties that I'm talking about. These will apply nationwide, but it's really going to help you here in the Seattle area. So if you are looking to eventually get into home ownership in the greater Seattle area, it's definitely going to help you out here. So we're going to cover those tips. And, of course, I'm going to answer anyone else's questions that's not necessarily covered in the webinar, because I'm always getting people that are throwing me some curveballs. So would love to answer anything here that anyone brings to my attention. One thing I'll remind people that are coming in the chat here, a couple of things. I've got a scan me link here, and I'm going to mention this a couple times here. Oh, hold on. Let's see here. What would Finn say here? I have a cool new feature here, so hold on. I'm looking to buy in Pierce County, but don't know. Sorry. Okay. Finn, I am glad that you showed up here. Let me just show this on the screen real quick for everyone else real quick. So great. Finn, I'm glad that you came to the right class. So we will go over the biggest tips on where you should start. And our team does a lot of business in Pierce County, King, Pierce, and Snohomish. But if you're looking in Pierce, we are here to help you figure out the right starting places. And by the end of this webinar, you should have some clarity on what the next actionable steps are to take and the common pitfalls to avoid when it comes to the home buying process. So thanks for being here. Anyone else? I've seen more people join. No one's been commenting. Maybe a few of you might comment in the chat. I want to make sure everyone can hear me. I've got 2 people saying they can. I just want to make sure everyone can hear me here before we start soon. Start in 1 more minute. Right here, just to let you know, I have a scan me right here QR code. If you happen to be using a computer, not your phone, this isn't going to really help you if you're using, like most people probably are, but if you are using a computer, you can actually pull out your phone and scan this QR code, and this will take you to a booking link for a one-on-one consultation where we can, after the seminar or webinar, we can go into your specific home buying goals and dig down deep into how we can best help you. I'm also going to drop our contact information, including that booking link, into the chat right now for you guys. especially for everyone that's using their phone right now. So putting that in there. I'm going to do it a couple of times, but let me go ahead and star this for you guys so you have access to it. But I plan on keeping this over here up the whole time for you guys, but definitely. Okay, so let me check here. It's about time to start, so I think we're going to get going right now. I think we got one more person that joined, so again, last reminder, everyone, QR code you can scan or booking links in the chat to do the one-on-one, but we're going to get started. Hey, thanks. I'm going to botch your name. Is it Quinny? Am I pronouncing it right? Is it Quinny? Quinny T? Hey, Quinny. Hope I'm pronouncing it, but gonna throw you on the screen real quick. Hey, Quinny, can you hear me? I just want to make sure that you can hear me because I was having mic issues earlier. Sabrina. Hey, Sabrina. I'm glad you can hear me. Okay. Well, spot on. Good. Thank you so much, guys. I'm glad. Yeah, keep engaging in the chat. You can ask each other questions. Mo, great question. So I don't plan on keeping you here forever. I know it's the evening. Some of you might have kids. I actually just put my kiddo to bed. So, yeah, I'm not going to keep you here forever. I don't want to drag this on. So, I'm going to try to keep this nice and tight. Probably a 30 to 40 minute presentation plus any questions you guys have at the end. If you guys have any questions through the process, I'll address it, meaning I'll let you know if, I'm going to be answering it in a slide that's coming up, or I'm going to pin it and make sure that we get it answered at the end. If I feel like you have a question that might be better to answer in a one-on-one consultation, like maybe it's more of a personal question for you, like your financial goals or whatnot, again, I'll give you a quick reminder. There's that free one-on-one consultation that's in the chat. But let's get started, everyone. I see you're all in here. So let me get rid of the music, because I'm sure you don't want to be listening to this forever while we actually do the presentation. Okay, so perfect. Let me get this up here for you guys. Okay, so here's our home buyer class, how to have a wildly successful home purchase experience. And one last reminder, since there was 5 people that just joined at the last minute, please check the chat for our pinned booking link, because if you have any questions after we're done with this and you want to take the next step to dig deeper into the home buying process, please book a free one-on-one consultation with me. Happy to go over your home buying goals, even if you feel like you're years out. I'd love to chat with you. But let's get into it. Okay, so how to have a wildly successful home purchase experience. Let's get into it. Okay, so our agenda. We're just going to quickly cover who I am. Easy breezy, right? And then we're going to go over the biggest major home buying steps that you should know about. The biggest mistakes to avoid. I like to do a positive spin on everything, though. So I'm calling these like tips that you want to do versus the biggest mistakes that you will avoid. So you're just going to naturally avoid them if you just follow my tips. And then, of course, we'll have the Q&A. And again, that reminder for a one-on-one. I didn't even put it down here, but there's a secret bonus for anyone that stays for the end. I'm not trying to keep you here forever, but I have a cool bonus item to help people out that's trying to have some help with some savings towards home ownership. So stick around, and I'd love to show you that at the end here. So let's get going, guys. Let me go over to the next slide here. So who am I? Okay, so Aaron Morrow is me. Realtor serving home buyers and home sellers in King, Pierce, and Snohomish counties. So I've been a realtor for over a decade now. I'm from Spokane, Washington, Eastern Washington. But I've lived in Seattle since junior high, except for 2 years where I moved to Denver to help my wife go through graduate school over there, where I was actually a volunteer firefighter, and then moved back here. So I got my real estate license in Denver, moved back here, been a realtor over here for since 2014. That's actually when I ended up buying my house, is back in 2014. I could even share that story sometime in this presentation if you want to hear it. But you know, again, nothing is more rewarding to me than handing the keys to someone for their first home. So I work with a lot of home buyers and home sellers. I love working with both, but there's always been that joy. I kind of have this a little washed out here, but I have a lot of pictures in the background here of a ton of first-time home buyers that I work with, and it's almost like a drug to me working with first-time home buyers. And there's just getting them the keys to their first home is just so exciting and so powerful, because it can be a life-changing moment for some people, and having the honor of being able to help them with that, there's nothing better than that. So there's that. So I'm a professional guide, fierce protector, and advocate for the home buyers with what's typically the largest purchase they'll ever make. So there's a little bit about me. This is kind of a subscribe button down here, just as a hint, because I actually do have a YouTube channel. This is a little bit like shameless plug or quick shameless promotion. I'm going to kind of quickly gloss over this because I don't want to like just make this like where I'm a walking billboard, but I do have I'm the self-proclaimed on YouTube #1 relocation team in Seattle, but we do, our team, because of all the relocation content and home buyers content we put on the YouTube channel, we get a lot of first-time home buyers and people looking to relocate to Seattle reach out to us for us to help them through the process. We current subscriber count, it's just under 8,000 there. You can go look us up and check us out there. But let me go ahead and go to the next one. So I have on my YouTube channel, when you guys do go check it out, I have a whole playlist devoted to first-time home buyers. So any of you that's on this, and if you're like, I didn't get enough from the webinar, and I want to do the consultation, but even after the consultation, you're like, okay, I met with Aaron and I'm not ready yet to buy a house, but I'm excited and I still want to learn more about the process and keep this going. Here's a whole playlist for you that I've put together for you that will just kind of walk you through the whole home buying process, even more in-depthly than this webinar could ever do in 30 minutes. So check it out. Let me know what you think. One more thing I'll point out here is this is another playlist that we've put together of a ton of past clients. The majority of them are home buyers local to the greater Seattle area who have bought in the area, and these are just their video testimonials. So they share their stories in these quick testimonies. As you can see, you know, they're between, you know, some of them are 1.5 minutes, 3 minutes long, whatever. And we're going to listen to every single one of them right now. Just kidding. We're not going to be listening to all of them right now. I'm not going to make you sit through all those. But if you do want to go check them out, please do. And listen to what they had to say about what the process was like. Not only working with me, but just the home buying process. They have a lot of good wisdom to talk about in there too. And sometimes it's nice to hear from other home buyers and not just like a realtor like me. So check them out. And then also just one last thing, just social media on here too. Same thing. We're kind of same thing on LinkedIn, TikTok, and LinkedIn, TikTok, and Instagram here. We put a lot out there of home buying education for our clients. And we meet a lot of clients on social media to really help them through the process. We actually, like on LinkedIn, we have this newsletter. This is a monthly market update newsletter, and then this is a weekly newsletter that we repurpose from a YouTube live video that we do. And all of our LinkedIn subscribers, we just started this one 2 weeks ago, and our subscribers love this one. So a lot of home buying education is kind of what I'm getting at. So I think
Aaron
that's the last one.
Oh, with us throughout
I did not mean to go to that one yet. Okay, so gonna go to the next slide. So I have I put together a 30-second highlight reel from all of those video testimonials, just so you could listen to about 30 seconds of what other people were saying about working with our team. And then we're just gonna move on to the presentation now, because I didn't want to be talking about me, but I wanted you guys to just get a little taste of who we are, our team, who I am, so you know what presentation you came to and who's speaking to you. Okay, so let's go to it right now.
Aaron was so patient with us throughout the whole journey.
Aaron is full of energy, so I appreciate that too. So it was a great experience overall.
He's just a great guy, great agent, and like I said, investor friendly.
Can you guys hear it, by the way?
With you was great. Thanks for all the great recommendations.
I hope you can.
Experience. We've had a lot of fun looking for homes and finally finding one with you.
Aaron's awesome. His team is on point, and would definitely recommend them.
You are a great host to work with. Thank you so much, Aaron.
Yeah, the thing I really appreciate about Aaron is how much
Great, Sabrina, thank you.
Accommodated us.
He's very
Loud and clear.
customer service.
Thanks, Mo.
He is oriented in answering all the questions that I have, and it's just been such a smooth process.
Working with Aaron has been amazing.
Doesn't know Aaron. He's a fantastic person and did a wonderful job in finding this home for us.
I recommend if you need a real estate agent like Aaron. It was great. Yeah, it was so helpful.
All right, so that's enough.
Aaron was so patient with us throughout.
Never mind, not going to make you watch that again. Okay, so, but I love working with my clients. Those scissors, by the way, that's like a new thing I just started doing this last year. So like, I started surprising some clients with when they close on a house, I do a whole red ribbon ceremony where I tie up the whole house in a red ribbon, and I have these gigantic scissors that I let them cut the house for them to be able to, you know, walk through their doors. And only my clients that want to be filmed, by the way. I'm not like forcing my clients to be filmed or anything. So these are my clients that are happy to do the video testimonials. So just to let you know, no one was like held against their will to do any of these video testimonials. All right. So thank you for confirming that you guys heard that. If you want to go check out any of the other video testimonials, you can go to my YouTube channel. Again, it's linked in the chat. It's the only two links I had that's linked in the comment chat, which is my booking link and my YouTube channel. Thought I would make it easy peasy because all my other contact info is on my YouTube channel anyways. So let me know if you guys can't find it at the end and I can send it to you. Either way, again though, booking link at the end. So let's get to the presentation. So what are the basic steps of home ownership? Well, you've come to this class to learn. This is actually one good avenue to start, is like a home buyer's class. You know, some people, they either just start with doing a home buyer's consultation, or they start with trying to absorb some of the video content, or just learning through online articles. I think you guys are really smart to come to a seminar or a webinar at first. It's a really good way to hone in and kind of get a bite-sized dose and hone in on what's really important to know, and then have someone give you actionable steps on where to go from there. So this is great that you're here. Honestly, the next big important step when you're going through the home buying process is getting pre-approved with a mortgage broker or a lender. I'll explain what those mean and the differences later. And then once you're pre-approved and you actually know what your budget is, that's when it's really important to find a realtor that you know, like, and trust to get out there house hunting with. And then, you know, they're going to write up the contract for you. Do the whole closing process. Notice how right here, that's this little thing right here, because there's a lot that goes into that little dot to cover. And you would be in a whole nother webinar that could be what is it like to go through being under contract on a house. And that's something that easily cover with people when, you know, we're in the one-on-one consultation. But we go over basic stuff in this too. So, and then once you've got your, you know, once you're under contract, obviously move into the house once you close on it. As long as everything went well, you know, your inspection went well, appraisal went well, financing went well, everything went good, right? Which it should. You know, you're working with a good lender team, you're working with a realtor you know, like, and trust. There shouldn't be any hiccups that you can't overcome. You know, there shouldn't be any surprises that you can't navigate through easily. You should be able to end with the end result, getting the keys to your new house, whether it's a new house to you or a brand new house, if it's like new construction. Either way, new house to you, that's where you should end up. This is my favorite part, but I always meet people here, obviously, and I enjoy every step of the way. So, anyone have any questions of this timeline so far? Before I move on to the next slide, anyone want to drop any questions? And it's fine. We can keep moving on into the actual like nitty gritty of it. Going once, going twice. Okay, I'm gonna move on. But if you do drop a question in here, just know I'll cover it. So let's get going. Okay. All right, so like I said, positive spin, right? I don't like to be negative. Tip number 1, find out if you qualify for down payment assistance. So how many people came to this webinar still hearing the whole idea or had the thought process that you had to put like 20% down on a house to qualify? Anyone in the chat still think that's like a thing that you have to do? Anyone? I'm asking this question in general because most of the time when I do these, I actually have half the people say that that's what they thought. And that's totally fine if that's what people thought, you know, because it's been, you know, it was that way back then. Yeah, Mo, well, not anymore. Yeah, of course. And Sabrina, yes and no. Yeah, okay, good. Well, yeah, there's so many different, okay, let's see here. Sabrina, I've heard if you don't have a larger down payment, the sellers will pass you up for better offers. Okay, Sabrina, thank you for your comment here. I'm going to put this on the screen real quick. Great comment. I can actually address this later, so let's put a pin in this, Sabrina, and maybe give me a reminder when we get to the Q&A. I'll cover this when we talk about offer making and stuff like that. So let's see here. And let's see what you say. I don't know anything. That's why I'm here to learn as I need a house next year. Great. And I'm glad you came. And I'm glad that you said that you're going to buy next year and you came to this class this year. It's awesome when someone is starting the process when they're even like going to buy in the following year, just because when you are in research mode a whole year ahead, you're going to be well ahead of the curve when you're actually learning the process ahead of time. Because I can't tell you how many people I end up working with where it's crunch time where they learn all of it right when they're getting out there to look for houses, and it's completely fine. It's just there's a lot that goes into it and they feel overwhelmed when they get all the information right when they're out house hunting. Totally fine, but you're going to feel easy peasy rested knowing all the information throughout the process until you end up buying a house. So, Anne, thanks, kudos to you. But yeah, Sabrina, we'll cover that question. Great. So down payment assistance. So Sabrina, I actually have, last year I had 5 clients get their offer accepted and they closed on down payment assistance programs. So, and some of them were in Pierce County, some of them were in King County. So the down payment wasn't the end all be all. So quick answer to your question. Yes and no. When we were in, I call it the time of COVID, the crazy bidding war scenarios that we saw in 2020, 2021, it was an utter bloodbath. Like we saw like people making like offers like 50K, some in like Kirkland, 300K above list price. People were like waiving all of their protections, which I was scared for some people. I was like, this is nuts. We need to keep protecting buyers. There's got to be a better way to protect our buyers, but let them win offers. And there are ways to be smart about crafting an offer that lets you win the deal, but you know, gives the seller what they're looking for, but you don't give up what is important to you and what you should be protecting yourself with. Again, that's kind of a whole nother class too, but that's like how to craft a really good offer. And I go over all that with my clients too. And we re-go over that each time we're putting offers together. And you need to be working with an agent that's, as we go into a seller's market, that's even more competitive as interest rates are coming down, that knows how to, craft those offers, but also communicate to the listing agent why your offer that has a lower down payment isn't a big deal at all. And the other stuff in the offer is things that that agent needs to be paying attention to, that's in the best interest for both clients, not only their sellers but your buyers too. So it's a win-win scenario. Great question though. Okay. So down payment assistance programs, let's go into it. So what is a down payment assistance? So it's a loan that covers your down payment and some of your closing costs. So many are 0% interest with no monthly payment. And then there's free education provided on how the whole programs work in Washington State. And then they'll cover up to 5% of the loan amount and down payment assistance available. So what that means is the most popular one is an FHA down payment assistance loan. And with the FHA down payment, it's 3.5% down, which means you can have up to 1.5% left over to cover some or most of your closing costs. Closing costs can vary depending on what lender you're working with and what loan type. Anywhere from 1% up to 3% is kind of the range we see. So using a down payment assistance program can cover quite a bit of your upfront costs, which you'll see in a slide coming up. So let's use this example for kind of just breaking this down. Now, of course, this single, so if we were assuming 500K as a single family, right, we can still find this price point, some decent homes, depending on what parts of King County, probably more like South King County in certain areas. And you're going to find this is still a good price point in Pierce County and parts of Snohomish as well. So that's why I kind of use this as a good average starting point. Again, this isn't a good starting point like on the east side. So everyone in the chat, vary your numbers, right? But let's assume the house price is, or the purchase price is 500K. The down payment is going to be 17,500 if we're doing an FHA loan, which is 3.5 down. That means closing costs of 2.5%. Let's estimate at 12,500. Without down payment assistance, we're talking about someone having to come in with the total cash to close at 30,000. So that would be like what the buyer had to come up with at closing with all of the money up front. And that's not including what they paid for while the house was under contract, like the inspection or anything. That's just what they're paying at closing, the $30,000. Now, with down payment assistance, because you could use up to that 5% on DPA, you could get it in a realistic scenario where you only had to come up with the 5,500. Now, one thing I don't even have in this slide, and I know we're getting into more of a competitive seller's market, but one thing that I've had success with my clients, and I still love doing this, is finding properties that have been sitting on the market for a while that my clients still like. And if they've been sitting long enough, we can go in there and negotiate the seller to pay for my buyer's closing costs, usually. And we don't have to use the full 5% on a down payment assistance program. We can just use some of it, which is actually more favorable to you, because how the down payment assistance works is the interest rate, it slightly decreases if you're claiming less of the percentage on the down payment assistance, which, since I'm not a licensed lender, I'm not allowed to actually go over those figures with you. But of course, I have trusted lenders and loan officers that I could refer you to if you need to get actual figures from them on how those work. But yeah, one of my favorite things to do is either look for properties that have been sitting for a while or look for off-market deals for my clients where we can go in there and get a seller to either do price reductions and maybe pay for some of the closing costs. Because in real world scenarios, every year I get a couple clients, even during the pandemic, I got a couple clients that used a down payment assistance program, and they were able to get into a house where they just paid for their home inspection, and they paid for their earnest money, but then they got their earnest money back at closing. So real quick to cover what earnest money is, it's like a security deposit when you like if you're renting. So when you make an offer on a property and when the seller accepts your offer, you present what's called earnest money. Like I said, kind of like a security deposit. So who holds that money is the title and escrow company. So the company that's in charge of transferring home ownership or the title from the seller to you, the buyer, they hold on to that money till we, all parties, you, the buyer, the seller, and us agents on paper tell them what to do with it. And there's only 3 things that can be done with it. It's either at closing, it goes towards any of your upfront costs, unless you don't have any, and then it goes back to you as a refund. Or if you leave the deal in a way you're allowed to contractually, which, knock on wood, all of my clients do because I educate them properly on how they're allowed to leave the deal, and they know ahead of time, they get it back all the time. They get their earnest money back if we leave the deal contractually. Or if a buyer leaves the deal or walks away in a way they're not allowed to contractually, the seller can claim their earnest money. So those are the 3 things that can happen. But I'm just explaining earnest money so then you understand that there are real world scenarios where buyers have been able to use down payment assistance and actually have the seller pay for the rest of their closing costs, where that buyer only ended up having to have the earnest money in escrow for 30 days and they got the money back at closing. So then they got into a house for basically having the money for escrow set aside for 30 days and they got that back and then just paying for their home inspection, which a home inspection, depending on what inspector you go with and what you want in the inspection, it varies, but I typically see it from 400 to like 600. They can go up above 1,000, but those are usually pricier companies that you're working with, and usually you get the same stuff. So 400 to 600 is usually what I tell people that to expect for your home inspection. But yeah, it's really exciting to see some buyers walk away where they just paid for their home inspection and they got their money back for the escrow. But I do like to caution anyone that comes into these that I'm not trying to preach buy a home for free. You know, like you have to have the money set aside for your earnest money deposit ahead of time. And earnest money is negotiable like anything, but I like how Anne brought up a question about if the seller will accept a down payment amount or not. And that kind of has me segueing into what's actually kind of more important is there's kind of like this industry standard of a customary amount of earnest money of 1% is kind of the minimum going around the area. In some areas, it's a little bit more like on the east side, but usually you can get away with just like around 1% of earnest money. Sometimes you can get away with less if the house has been sitting on the market. But I would, if any of you were asking me, Aaron, how much earnest money would I need to put into my deal if I was in a situation where there were multiple offers, like in a bidding war situation or a light bidding war situation, usually you can get away with 1%. And that's pretty easy math, right? That 500,000 you'd be expecting to put into escrow 5,000. And like I said, at closing, either get that back or, goes towards your upfront costs. So, yes, Mo, I'm going to move on. You are definitely going to get a copy of this presentation. So after this is done, you get a recording of all this because there's a lot. I'm always saying, I try to, move quickly through stuff, but I am so analytical and I like to teach everyone about the home buying process. So, let me know in the chat. Anyone, am I saying too much? Do you want me to kind of say less, or is this good info that you're getting from me? Okay, and fantastic, good question. So I have great, Victor, thank you. Yeah, this is good info, Sabrina, thank you. Okay, and great question. Where do you apply for down payment assistance? So, you'll want to work with a lender that so for Washington State down payment assistance, you'll want to work with a lender that actually is certified to work those types of loans. I do have a lender that does that. Now, I will let you know the Washington down payment assistance loan is heavily controlled. So that means it's the same rates and fees for that loan because it's Washington State controlled across the board. So working with the lender that I'm recommending to you, it's one of those rare scenarios where like you're not going to be able to shop around for a better rate if you're looking into down payment assistance for the Washington State DPA program. Now, of course, you always hear shop around for a good rate on any other type of loan, and I'm a proponent for my clients to shop around. But good question, Ann. If you book a call with me, on a one-on-one, I will definitely get you my lender's contact info, and I will introduce you to the lender that does the DPA program, so we can look into if that's the best option for you. Other shameless plug, I don't even know if I was going to put it in here, but I do have another lender if we don't go DPA, that he's a mortgage broker, and maybe I should switch slides. Let's keep going. I'm going to talk about the mortgage broker in a minute. I just kind of teased something, but I'll get back to it. So let's keep going, guys. Unless you guys have any more questions, let's keep going. Okay. So types of mortgages. This is what I was trying to transition into. There's conventional, FHA, USDA, and VA. Those are kind of like the big four dogs. So is anyone in here, by the way, prior active military veteran? Anyone? Or anyone family members to prior active military veteran? Anyone? It's okay if not. The reason why I bring it up is that's obviously it might not be to them, but it's a no-brainer. Definitely look into. Oh, Mo, fantastic, good. Well, look into using the VA option just because you can actually have if you're a family member to someone that has VA benefits, including VA housing benefits, they might be able to gift you basically you being able to use their VA home loan benefits. So it's something to look into with the lenders. Definitely check it out. But very clearly, if you are active or prior military, this is the first loan you should be looking into, even if you wanted to put a down payment down. Because, the biggest thing you hear about with VA is zero down, which is great. That's awesome. And arguably VA loans, they also come with, sometimes, better interest rates. But I have a lot of veterans or active military that come over here that work in, Fort Lewis, McCord, and they're using this benefit even if they have a down payment. So some of them still put like 5% down because that just makes sense when they talk to the lender and how it's structured in the loan, and they can get like more favorable terms on the monthly payment. But it's still a really good loan product to look into. Again, though, your lender should advise you on the best type of mortgage for your situation, and that's what your lender will go over, and that's why it's so important to talk to an actual mortgage advisor, a lender, to go over a holistic approach at your finances and figure out which loan type is right for you. Like USDA, I'm not going to get into too much of the weeds on this one, but it's another zero down loan. You don't need VA, like you don't need to be active prior military or anything with the USDA. The biggest thing though, if any of you are in King County, USDA is out. Like if you're looking in King County, because it's geographically restrictive. So USDA is only going to work in certain parts of Pierce and certain parts of Snohomish. But if you're looking in those parts, and again, you could book a call with me and we could go over that. That's another zero down loan that you could look into as well. So let's see here, Mel. Great question, Mel. You know what? That's a good question, but that one is always changing, and I think they just recently even changed it too. So I don't like to give that one out because my licensure doesn't actually cover me giving out that info. But that would be a good follow-up question, Mel, that you could either book a call with me, or again, I could get you in front of my lender that could easily answer that. Or at the very least, what we could do is after booking a call, if you decided to not want to move forward with the lender, I can easily get the lender to at least email you all of that information. So good question though. And it also depends on if you're single versus if you are married. You know, obviously with if you're married and you're buying if you're doing marital status, you do get a little bit more income. Or the max income limit. So, Victor, let's hear. Yes. So, Victor, good question. Here, let me throw yours really quick on the screen here. So this is a good question for everyone to see real quick. If you get down payment assistance or zero down payment, that means the monthly payment for the mortgage will be higher. Yes, in essence, it will be, because anytime that you're adding more money into the loan versus paying any of it up front, that will mean that your monthly payment will increase. Now, all of these loans that we're looking into are standard. You're looking at a 30-year fixed interest rate loan. Some people go for the more aggressive approach and do like a 15-year payoff. Those are more a lot of people that do low down payments or down payment assistance programs don't go for those options anyways, because they're quite a bit more expensive. Like on the monthly payment, you know, you're not wanting to double that. A good thing to, another pro tip is, rather than starting out with like a more aggressive 15-year payoff, if someone's wanting to pay off their loan quicker, just add extra payments on top of whatever your minimum payment is each month, and you'll actually pay that thing off a lot quicker than the standard minimum payment. Let's see here. What determines the amount you pay for a mortgage? Example, age. And it's not age, so it's not going to be as crazy as like car insurance. They're primarily looking at credit score, so credit worthiness, and job status, and debt to income ratio. And I'll get into it. So let's move on, because you're asking some good questions here. So because I do cover it in these slides. So Federal Housing Administration loan. This is the FHA loan. So FHA loan provides mortgage insurance on loans made by FHA approved lenders throughout the USA. So the reason why I say that is some lenders are actually not approved to do FHA loans. I don't run into them too much, but even some banks actually decide not to do them, which is weird, because there's a lot of there's kind of a misconception where it's like known in the industry as the first time home buyers loan, but anyone can get an FHA loan, guys. Like I think you only had you can get it like every 3 years basically. So as long as you don't have an active FHA loan in your name within like the last 3 years, you can get an FHA loan. So you don't have to like be forced to only do conventional as your second home or whatnot. So anyways, let's keep moving on. So benefits of FHA loan: low 3.5% down, 580 credit score is the minimum down for the FHA. Now, don't confuse this with the FHA DPA, the down payment assistance program. So the minimum credit score as it currently stood was 620, I believe. And then, but for just an FHA loan, no down payment assistance, 580 is the minimum credit score that you can get on that. The low 3.5%. Now, they will take right here, like we said right here, credit scores as low as 500 with 10% down. So, and this seems real niche, but I actually had a buyer 2 years ago take a lender up on this offer, and they did this, and it was just because they didn't have that good of credit built up. I think they did a few things that kind of tanked their credit, but they didn't want to wait because they found a really good deal on a house, so they went with that. And I mean, their house, oh my gosh, you know, within a couple years, the amount of equity they have now, it made sense for them. So, all right, easy refinancing with FHA Streamline. So one of the things with FHA loans is they're just a little bit easier for lenders to refinance for you. So super easy to do. And then another cool thing, one thing I didn't put in here is most loan types, they have, if you're doing under 20% on the down payment, a lender will charge what's called mortgage insurance. And that's for them, not you. So you're paying that for the lender to feel insured, like to cover basically in the event that you as the buyer default, meaning you stop making your loan payments. That insurance is in there to help. Basically, the lender can claim the mortgage insurance to go after and get paid out if you stop paying on the loan. Now, the cool thing, what someone can do to lower their monthly payments on a loan without necessarily having to refinance a loan, is once you get over 20% as far as what your home's value is compared to what your what you owe left on your mortgage, as soon as that ratio is above 20%, meaning, if I'm saying this clear enough, you have more than if you have more than 20% equity built up into your home, you can actually go to your lender and request that they just take off that mortgage insurance. And that can easily be another, depending on how bad of a deal you got on mortgage insurance. Because some lenders give you a good deal on mortgage insurance up front. Like, you can find a lender that shops around for a good mortgage insurance where it's like just $50. But some lenders charge, if they didn't do a good job shopping around for you, you could get mortgage insurance that's like $150 or whatnot. So you could easily save like $150 by just getting the lender to remove that after the value of your home is worth more than that 20% loan to value ratio. Did I explain that enough? Sometimes I'm like, am I explaining enough where I'm not overcomplicating it? That's one thing I feel like as a realtor, I'm always like, did I explain it good or well enough? They always say that I'm always working on explaining it so my audience understands what I'm saying. Yes, Sabrina, thank you. Fantastic. Good. Okay. So higher DTI ratio. So DTI stands for debt to income ratio. I might pop quiz you guys on that later, so just remember that. And then you can choose between, like I said, that 5 to 30 year fixed ratio. And then down payment assistance programs, we already talked about that. And then here's the other thing. Seller can pay closing costs of up to 6%. The reason why this is so cool is, notice how I said the typical closing costs are between 1 to 3%. What we were doing last year when, because we're still very much in a seller's market, but what we were doing all through last year, still doing it in some areas, depending on how crazy, if there's bidding wars or not. There's some buyers that are getting sellers to pay for what's called a rate buy down, where the buyer is having their realtor negotiate on their behalf to get the seller to, instead of just covering closing costs, they're actually paying for a credit to go to the lender to buy down the buyer's interest rate, either permanently or a temporary rate buy down. So some lenders are suggesting, because we're on a decline on the interest rate right now, that it's not the best allocation of resources. It doesn't make as much sense as it did last year, but just know that that's something that was going on last year. And this loan, the FHA loan, you can claim up to 6% in total costs from the seller if you can get a seller to agree to it. Of course, everything's negotiable, right? Any questions? I can move on, but good. I'm glad that you're all still here. Conventional loans. Okay, so these are pretty common. These are the ones that you hear about, like people either doing 5 to 20% down on. So a conventional loan is a home buyer's loan that is not offered or secured by a government entity. It's available through or guaranteed by a private lender, and there's 2 government-sponsored enterprises, Fannie Mae or Freddie Mac. So you've always heard of Fannie or Freddie. I don't know if you guys have ever heard those in the news going around or anything like that. Yeah, but that's essentially what the conventional loan type is. So what you can and cannot use down payment, what you can and can't use for down payment and closing costs. So let's go over this. You can actually use 401k or retirement accounts as your down payment or any of your upfront costs. So you can pull from those to get money for your earnest money, any of your upfront costs. And I always tell people to check, but a lot of 401ks have clauses in there that if they're pulling money out early to use for a home purchase, they actually won't penalize you for the house. But like, you have to check. Some of them don't. Some of them are like, nope, sorry, we're going to penalize you anyways. So you can actually use, I have a client right now. Like, I literally just got done writing an offer for a client right before this webinar that we're using a huge amount of gift funds from their dad from Canada. So we're using foreign gift funds from father to pay for a huge amount of their down payment. But you can use gift funds from a relative. Yeah, so you can use gift funds, which is great, from a relative. And then stocks, bonds, cash. Now, let's just talk about cash, though. Cash meaning trackable. Like, it has to be from your bank account where it's been seasoned in there for, I think it's like, I always say think, by the way, when it's something that's like towing the line on my licensure, by the way. So I think it's like 60 days. You'd have to fact check me with one of my lenders. It's either 60 or 90 days. It has to have been seasoned in there so they can track that it's been in there long enough so they know the cash has been sitting there long enough. So they can't be, it's an industry term called mattress money. So like if someone, it's a huge no-no in the industry where if they see that someone pulled out, like just deposited $5,000 out of nowhere into their account and they can't track where it came from, the lender is going to have a lot of questions and they're going to ask the person, okay, you're going to have to write a letter explaining where this money came from so we can track it. And if we can't track it, you're just going to have that money seasoned there for that 60-day window. We can't count that money as any of your funds that are in there. Like basically they have to pretend it's not there, is essentially. So what you can't use as your down payment or any of your closing costs, credit cards, can't do it. Can't use a personal loan. And again, like I said, this mattress money, this undocumented cash. So anyone, any questions on any of this? So maybe not. I feel like this section's kind of more simple. So, oh, one cool thing I learned, by the way, I'm always learning in this industry. I've been doing this for a decade, but not that many VA clients take advantage of this. But I had a VA client recently do this. The VA loan lets the VA home buyer, their loan can use their closing costs from the seller to pay off their credit cards. So that's a big thing because no other loan type will let them do that. But the VA loan actually will literally let the seller pay off the VA, that buyer's credit cards. So I was like, that's cool. Little known fact. Anyways, just kind of throwing that out there. All right, I'm going to this next one. Buyer's eligibility based on underwriter review. So the underwriter, this is the person that's like always in the background. You're always talking to, when you're working with a lender or a bank, which I'll get into later, maybe why or why not you may or may not choose to work with your bank. But the underwriter is the person in the background that is processing the loan, and their job is to check all of the guidelines to make sure that the loan was done correctly and the buyer actually qualified for the loan. So they're checking your ability to repay the loan, your willingness to repay the loan, and then all of the collaterals there. So sometimes, depending on how complicated someone's situation is, the underwriter has a harder job. Like a lot of the times when I work with small business owners, Those loans are more complicated because a lot of the times they're not doing W-2 tracking, they're tracking bank statement loans, which are just more complicated. So moving on though, because I've been keeping you here guys for a while. Okay, let's move on because I feel like I've been doing this one longer than normal. So tip 2, get pre-approved. All right, get pre-approved like we were talking about earlier. Here's the 3 pillars of a mortgage approval. So like I said, credit, income, and down payment worthiness. So like, do you have the down payment, or can we get you the down payment is what they look into. So let's go over the difference. So loan pre-approval. So pre-approval helps you determine how much you can afford to spend on a home based on these 3 factors: your credit, your income, and your assets. Your pre-approval can help you determine what house you qualify for, increase your bargaining power when negotiating with the seller, and estimate your monthly payment and total investments, and identify which loan product will fulfill your needs. Basically, again, like we were saying, you'll meet with, again, bringing it back, book a call with me in my booking link so then we can get you in front of one of the lenders that I feel would work best for your situation. Because I actually ask you these questions to determine what lender is a good fit for you and what would most likely be a good scenario for you. Because I hate if a client doesn't have to talk to a bajillion lenders to get the right answer, I try to avoid that. And I would rather have you talk to a lender that I think will solve your issues on the first go. And then you feel good about being like, great, that was awesome, Aaron. Do you have anyone that I can maybe just get a second opinion from? Fantastic. Let's go that route. I'd rather go that route than you being like, Aaron, I was frustrated. I didn't get my answers or my questions answered. So I'm trying to match you with a lender that I know would fit your home buying goals and your needs based on what we've discussed and what type of loan product I think they're probably gonna want to recommend to you. So hopefully that kind of answered this. That's why it's super important in here. So tips for a simple loan approval. So the do's and don'ts of loan pre-approval, if you will. Do call us if you have any questions. Continue living at your current residence, so don't move. Continue paying your mortgage or rent, so don't, stop paying rent if you're trying to buy a house. Continue to use your credit as normal. So like I try to tell people, don't freak out and like feel like you have to like just stop living your own life, but also don't go crazy with it. Like I tell clients, if you're going to buy a house, don't go buy a brand new car. Don't buy a whole bunch of furniture right before you're going to buy the house. Like talk to me first so we could talk about what you should do, because what we're not trying to do, we're not trying to max out a credit card here or, tank your credit or anything like that, but use it how you normally would, right? Keep working at your current employer, so don't lose your job. Some of these things people can't control. I get it. So keep your same insurance company, so don't switch insurance companies. Stay current on all existing accounts. Expect requests for additional documentation throughout the process. I throw this in here just because I see it all the time, how often lenders are requesting more info. So how do our assets factor in for our pre-approval? Great question. So funny, your assets, and sometimes it's even more important with your assets if you're in a loan situation where you don't have much income to go off of. So there are some lenders that will be more heavy on assets, and there are actually some like 100% asset-based loans out there. So like for retirees that are making any more income, the lender has to base it off of people's savings accounts and what their total assets are. But the lender is going to look at your total DTI, your debt to income ratio, but then also see what you have in assets. And the underwriter is going to play a factor in that. So they're going to say, okay, so your credit profile, they're going to look at you. Does this person already own 5 houses? And are 4 of them rented out where they're actually making income on those? So that's actually counted as income. So those are assets now and not liabilities, right? Or does this person own 5 cars, they're not paid off, they're all on 5 car payments, and they're actually a liability, for those car payments. So that's as much as I can get into it. So if you want to get into more of the weeds on that question, that is definitely something that I would suggest you chat with one of my lenders on. I hope that kind of skimmed the surface on your question. Let's see here. Why continue? Oh, okay. Victor. So, what I primarily, the do's and don'ts of this are primarily when you're actively house hunting. So this would primarily be when, like, during that 90-day period where you're going to buy the house. Don't, it's not the biggest factor, but it does complicate the process if you're going to be in a move. And there's a way, like, that one's not going to actually tank the process, but it's just going to be like, there's going to be some setups that we're going to have to do with the escrow company and your lender to make sure that everyone's on the same page and it's not going to rock the boat for anyone. So it's not an absolute don't, but just if you have to move, like, tell us about it so we can properly communicate and make sure everyone's prepped and realize that the address change happened. So thanks for letting me clarify that. I hope that kind of answered that. I think I kind of answered some of these don'ts. Okay, let's hear. Why does it matter if you change your bank account or transfer a balance to a different account? Okay, so good question. That question is merely not to stop you from getting the loan. That is if you just don't want to have to deal with the paperwork trail that you're going to have to deal with the lender. If you're okay with providing more documentation and more explanations to a lender, because every time you do any of those transfers, the lender is probably going to ask you why it happened, where it happened. So if you're okay with just more paperwork and more explanations of where the money was moving to, you can do it. So I just try to make these do's and don'ts as, like, if someone wants an easy peasy process that they're not going to have to, they're going to deal with the least amount of paperwork or questions being asked to them from the lender as possible, this is probably the do and don't recommendation list. Your lender will actually give you an absolute do and absolute don't list. And that list is like they will tell you what will nuke your deal. And by nuke, I mean, like, will make you not pre-approved again. There's very little you can do to actually make it where you can't buy a home. But, like, one of those is, like, going out to buy a brand new car. Depending on the person's amount where their credit points were, like, if they were, to just give you an example, I'm not trying to go off on, like, a crazy tangent here, but I had this happen to a client where this was several years ago, but what ended up happening where they were just so close on the credit, the credit score, the minimum credit score needed, and that new car purchase put him below, like, it dipped them where they couldn't recover in time for the closing. So thankfully, the way we wrote the offer, they were protected. They got their earnest money back because the financing protected them, but they lost the house deal. So that was rather unfortunate. So it's just one of those stories where, like, before you're going to do something big like a car purchase, like, that's one of those, like, talk to your lender about it first, of course. I'd say any of these, like, situations, though, again, your lender will give you the absolute don't list and talk to them about it. If you feel like there's something that is questionable, bring it to the attention of your realtor or your lender prior to doing said thing. Biggest takeaways, though, don't go out buying a brand new car. Don't max out your credit cards. Don't have a bunch of mattress money. Keep your job. Those are the biggest ones. So that's me simplifying it. Hope that works. All right, let's move on. Pre-approval versus pre-qualification. So pre-approvals. So this is where the lender, how many of you have, like, know the difference or have heard, like the different terms floating around, like pre-approval versus pre-qual? Anyone in the chat? Have you guys heard these terms floating around? Pre-qual, pre-approval? This is water. No, that's fine. Let's go. So pre-approval. So pre-approvals are great. Okay, Sabrina, pre-approvals. Yeah, pre-approvals are the better option, of course. So pre-approvals, it's where the lender actually reviews your income, they review your credit, they review your down payment source. They're more reliable. They actually tell you a maximum qualifying amount. The pre-qualification is like where someone can just walk into their bank and just tell their bank how much they want to buy in a home. And like, it's almost like that. So it's just based on the data you as the borrower submits to the lender. It's based solely on the information handed over to the lender. So it doesn't mean much with accurate data that's not provided. It's only based on information that you provided. The lender hasn't fact checked it. And I go into one of the I go into later on of several reasons why you may or may not want to work with your bank to buy a home. One of the reasons is most banks don't actually give you a pre-approval or even start an actual pre-approval till you're under contract in a house. Like, they don't want to actually go through the process of fully actually pre-approving you till you get the house under contract. But in a seller's market, the seller and the listing agent, they know the difference. They can tell in a letter if someone's actually been pre-approved versus pre-qualified, because the lender's not allowed to say pre-approved if it's just a pre-qualification. So a good listing agent's going to comb through it and make sure that it's an actual pre-approval and not a pre-qualification. If you're in a situation where there's multiple offers, the first offer to get thrown out is the one that's a pre-qualification, because that's just risky for your seller to take the pre-qualification over all of the other buyers that have done their work to get pre-approved. Does that make sense, chat? Anyone in the chat? I just want to make sure that you kind of this is making sense. The biggest difference in takeaways between pre-approval and pre-qualification, because pre-qual you could get done like same day within like an hour from, or you could even get it online like automatically. Pre-approval takes some time, and the quickest pre-approval you can get done is like within 24 hours with most lenders. Great. Yes, makes sense. Fantastic. Thanks, guys. Okay. So, again, because I've been doing this for a while, quick shameless plug, scan me up here for the book one-on-one link. And again, I'm going to put it down here because it's just been forever. For anyone that's new, because I actually watched a couple people join halfway through into this. That's my booking link. All right, let's keep moving on. All right, tip number 3. So this kind of naturally goes into it. By the way, I actually am using like real like Pacific Northwest, like greater Seattle area. This isn't stock photos. So I just randomly like throw this out here every time. I always forget and it catches me off guard. I'm like, oh yeah, that was one of my old listings. Anyways, avoid using your bank. So tip 3, avoid using your bank if you can. Now, I'm not saying absolutely don't work with a bank, but I feel like we should at least properly educate you on maybe what the pros and cons are so you can make an informed decision if working with a bank is right for you. And that's what I'm here to do. So let's kind of go over that. So bank penalties could be expensive. You don't run into this a lot, but most banks, they actually lose money on mortgages. So they don't put a lot of resources into them. In large banks, you're just one of, thousands clients to them. And large banks typically have stricter guidelines that will not cater to specific situations outside of their general box. So just a lot of people that come to me, if they first started with their bank and they got frustrated and couldn't get pre-approved, I always tell them, hey, explain your scenario to me. That sounds like awfully like someone that I know that's already been what you've been through, and I know a lender that actually was able to get them pre-approved. Let's double check. You know, and 9 times out of 10, you know, my lender can get them approved. So like these are just examples of just sometimes banks have stricter policies, you know, because they're not making money on, it's a loss lead for them. You know, they want you, they're giving you the loan because they're making money on all of the other services they're providing to you, like your checking account, your savings account, those things. In large banks may not offer down payment assistance programs, and they definitely don't offer super niche ones. So like, for example, one of the lenders I work with that is DPA certified, that can do the Washington State DPA program, their mortgage company also has their own in-house down payment assistance program, and they go over that with you, the pros and cons of both, so you can look at both of them stacked up, and they can actually say, hey, we pre-approved you, and then here's what this one looks like, and here's what this one looks like. Here's the interest rates, here's the monthly payments, here's the upfront costs. It looks like for your scenario, this one's actually looking better. Which one do you think? And then they'll go through that with you. So just to give you an example here. But let's go over some more examples. Oh, that was it. So I need to make some more slides about this bank. So let's go over some more things that I just want to educate you on real quick about banks. So in this, I'm going to lump credit unions into this too, because again, I bank with BECU. So I love BECU, by the way, credit union, shameless plug. But one thing you want to do if you're going to use a bank or a credit union is you'd want to make sure that you're working with a lender through the credit union or bank that actually can work evenings, holidays, and weekends. The reason why this is so important, again, personal preference. If you don't care about this after I give you the information, that's fine. But the reason why this is so important to me as a realtor when I work with buyers is it's frustrating if we can't do this. Because most of the time, especially in a seller's market, which we're in, houses go quick. And most of the time, my buyers end up seeing something on the weekend or in the evening, and we want to make an offer in the evening or on the weekend. And when we're presenting an offer, I want your pre-approval letter to state the amount we're offering. If we're not in a multiple offer situation and I'm trying to negotiate a better deal for you with a lower amount than what the listing agent has listed, so for example, let's say there's a property that's listed at $500,000. My $500,000 example again. And you're gonna go in, and we've looked at it. It's been on the market for a couple weeks. We think that you can probably get it for $480,000. I don't want to present your offer saying we're going to offer $480,000, but we just have your generic stock pre-approval letter from the bank that says you're pre-approved for $550,000. I don't want to show them that you can be pre-approved for more. I want your pre-approval letter from the lender to be updated to say $480,000, because I don't want to show the seller your cards. That's not in your best interest for me to show them that. It doesn't help us. So we want a custom pre-approval letter at any given time from your lender to show them what that looks like. So that's a huge one for me, is a lender that works with a bank that actually works more like a traditional loan officer at either a private mortgage institution or a mortgage broker that can, pick up the phone and be reached nights, weekends, certain holidays, that sort of thing, right? Does that make sense? Anyone in the chat? Would that make sense to you? Like, would you be a little frustrated if you couldn't get that pre-approval letter and you'd have to wait till Monday and then you missed out on the house? I've seen it actually happen so many times. So like, that's why I'm using this as a real world example, because I think it's not even just to my clients, but on the seller side, when I list properties, I see it happen so many times. Like even in multiple offer situations, there's people that they will present a offer for their buyer and they don't present it with the pre-approval letter because they're just saying, oh, it's from their bank and we're just waiting to get the letter. And it's like, but the seller has all these, we can't wait around. Like we got 4 people that said they want to buy this house and we got to it's disrespectful to them to not move forward with someone. You know, we don't want to make everyone wait around forever, you know? Anyways, cool. Okay, so that's kind of one of the big things. I mean, you know, now here's the thing. I work with a guy at BSU that's great, and I work with someone at US Bank that's pretty good too. But another thing that certain banks are known for because of not having the proper resources are just closing times. So traditionally speaking, most lenders should be able to close most loan types within 30 days. So like what that means is most of the time when you go under contract, so what I mean by under contract is the moment you go under contract with the seller accepts your offer to the moment you get your keys, that typically takes about 30 days. Now, that's the industry standard. It used to be 45 days. It's gotten a lot quicker. I have lenders, like the two biggest lenders I work with, they can do it in under 25 days. Like I got a lender that he's just promised in an offer that he can do it in 21 days or less. And these are big deals for sellers, the speed to closing ratio. So these are small things that are helping our buyers win offers by being able to stand out in multiple offer situations if we're able to close quicker. And most banks can't promise this. Most banks either say, no, we need to stick with the 30, or some banks come back and they even say, no, we still are on a 45-day close. Like we can't do anything quicker. And some banks are even worse, where I've seen it where they'll say they'll do the 30, but then they won't close on time for you. And then they put you in a very awkward situation where you as the buyer, our team, you and I have to go back to the seller and ask for more time, ask for an extension. Basically, our contract ran out and our tail's between our legs and we're like, oh, we need more time to close. And then the seller gets the opportunity to either say, okay, yes, I'll give you more time, or no, since it's a hot market, other people have made, said that they would like to make offers on my property if this doesn't work out. Now, obviously, if you're working with a good realtor, we'll work through that and you're not automatically going to lose the house. There's things that you can do, but obviously we could just avoid that situation altogether if we're working with a lender that we know can close on time or can hold themselves to closing dates, and even better, can do quicker closing dates. So really cool. I want to just share this real quick story. It'll take 30 seconds. I had one of my recent clients, I was helping them with the sale and buying at the same time. So they were going through a divorce. I'm going to work with the wife when she's ready in a year, but the husband was ready by now. So they sold their property, and he was super aggressive and wanted to buy something like right away. I had him, as soon as his sale was under contract, I helped him buy something within that same weekend, like get it under contract. I went all over Carnation for him, not real Carnation, all over creation, not Carnation up north. But we were looking all over Gig Harbor, basically. Found him the right property, got it under contract, and the lender we're working with closed the whole deal within 2 weeks. 14 days. We got it under contract, closed. Everything simultaneous closed on both properties, got him in the property. He was overjoyed that was like a thermodynamic miracle that we pulled off, but we just hustled and got it done. Anyways, I digress. Let's move on. You guys are like, we've been here way too long. Let's keep going. Avoid negotiating directly with the builder. Okay, so my tip number 4 is about new construction. So I have a lot of buyers that start with new construction and they look into new construction as an option because it can be a good option. The pros are most of the time, if you find a house with a floor plan that you like and a community that you like, you get the average, the advantage that the house is brand new, right? But if you work with the builder and if you think, oh, I don't need a realtor to represent me, I'll just work with the builder directly. They've got agents. I mean, that agent they represent the builder, not you. They are employed by the builder to make sure that the builder's best interests are taken care of and not yours. and they will just walk you through the contract, but they're not there to make sure that, you know, you got a fair deal. And, you know, of course, we hope that you worked with a good builder and, you know, it's all good, and most are credible. But here's the thing. The vast majority of the builders in the area, they already have agreed to offer your agent a compensation to help you buy a house through them. So as long as you go about it the right way. So builders have gotten stricter on this though. So because they're trying to protect themselves against people that go to a bunch of sites and then just decide to hire an agent later. So what you really have to do, this is just kind of a quick side tip, whether you end up working with me or any agent that you know, like, or trust, what you want to do is make sure that you register with your agent ahead of time for the new construction community that you're going to look at. Whether you bring your agent along with you to that first meeting or not, or else that builder will refuse to pay any sort of compensation to your agent. And then your agent will be left with nothing to represent. Basically, your agent will be forced to represent you for free on that transaction. So easy thing to avoid, because you just say, this is my agent I'm working with, and you sign them in. Or your agent, better yet, I do it for my clients. Like, I just, you know, because I know which communities they're going to want to see, and I either go see them with them or I pre-register them, make it easy peasy for them. But I always want to represent and negotiate for my clients on their behalf, because I want to make sure that there's no funny business going on. You know, 9 times out of 10, the builder, it's reputable, but the builders always force you to sign their contracts. So unlike buying a home on the Northwest Multiple Listing Service, like the MLS, where 99% of everything's sold, we have our own MLS contracts that everyone uses. And these have already been pre-vetted by, you know, Washington State attorneys that all the language is fair, right, across the board. Builders use their own addendums, and they force you to sign all that paperwork. We can't use the MLS forms. So you want a realtor that's representing you that reads through that paperwork with you to make sure that there's nothing weird in there, right? And sometimes there's weird stuff in there. There's stuff that's like, no, we're not going to agree to that. That's in, how would you know? Or, I mean, I'm not saying how would you know, but some, you know, average Joe homebuyer might not know that is something that should not be asked of them to sign. So those are things that I'm actually looking for when we're looking at new construction property. And then not only that, builders will rarely ever negotiate on price. They always price fix their properties where they have a set, this is how much it's priced, and they'll do incremental price drops for the community as things go up or however long they've been on market. But one thing we can negotiate, depending on how long it's been on market, is we might be able to get a builder to sweeten the deal for you if something hasn't been moving and you like, you know, their product that hasn't been moving, maybe more closing costs, or throwing that upgrade for a better fridge. You know, maybe you want that bigger, spacious, industrial size 2-door fridge versus the smaller one. So those are things that we're always looking into with new construction. And you can get sometimes really good deals in new construction depending on which areas you're looking in. But even the new construction market is not immune to these crazy bidding wars in certain areas. So if any of you are in the chat looking on the east side, just in general, always on the east side, it's always been some of the hottest areas for even in the new construction market. But that's my biggest takeaway and tip. It's primarily, you know, with you, the perks to working with your own realtor to help represent you with these builders. There's not really a reason not to have someone represent you when buying new construction. Anyone have any questions on this though, like with new construction properties or any builds? Did I mention anything in this that was kind of like an aha moment that you were like, you had absolutely no idea that that's how it worked? Anyone in the chat? while I move on to the next slide? I forgot I had this slide. I could have breezed through this a lot quicker. Me. Yeah, Ann says me. Great. Good. Okay. Well, I basically just covered this without giving you the awesome visuals. So, okay, tip number 5, get a home inspection. I tied this into the builder, by the way. Don't avoid your home inspection, folks. This should be a no-brainer, but honestly, it got crazy during the pandemic, and there's a lot of people waiving their home inspections, and there's ways to go about not waiving it. You know, some people even don't care to do it. Like, they would rather save the $500 and not do the home inspection. And just the way I see it, if you're buying, like, you know, a $500,000 property or whatever, that's a $500,000 property. It's a $500,000 asset. You're going to spend $500 to just make sure. Yeah, Mo, let me send the link to you one more time. Let me get it in here for you real quick. Thanks for letting me know, Mo. I'm almost wrapped up. This is my last tip, and then we're at final Q&A, by the way, guys. So thanks for bearing with me. I got a little bit more. You guys had me excited in this chat, and I got a little bit more in depth and detailed with your questions, by the way. So it's your guys' fault. No, just kidding. It's totally me. I'm talkative tonight. Don't know what I'm hopped up on. Anyways, tip number 5, get a home inspection. So like I said, yes. So primarily, don't avoid getting the home inspection. Spend the $500, $400, $600, get the home inspection every time. There's situations where some buyers, if you're in a multiple offer situation and you can't avoid. Oh, Mo, yes. Again, as a reminder, Mo, I want to remind you guys again, there's a lot I've covered. So you are gonna get recording of this to replay, but I encourage you, we've just skimmed the surface. So if you're feeling overwhelmed now, I want to dive deeper into this for you. So if you got excited from this, but still feel overwhelmed, take a breath, because I am like your talkative realtor. I'm here. If you are like, look, Aaron, pal, I want to buy, but I'm not ready yet. Like, I'm ready in a year. You're like my perfect person to talk to. Like, I would rather meet you, have a conversation with you, talk to you through your whole home buying process and get you truly ready and informed, and keep in touch. And we can have incremental conversations throughout the steps, but it's a simple step. Book that one-on-one consultation so we can get, so I can actually have a one-on-one back dialogue conversation with you to figure out where the next most logical step is for you, Mo. So I encourage you, Mo, especially since you're telling me you're feeling a little overwhelmed, pal, buddy, go ahead, book that one-on-one call with me, because I'd love to have a one-on-one with you so we can go over your home buying goals. Super easy peasy. I'll get to the bonus right after Q&A right now. But so home inspection, I think I've just rewound 3 times. Yeah, so what we can do if you're in a multiple offer situation and to not avoid a home inspection, there's a couple of things that you can do. You could do either what's called a pre-inspection. This is where you're paying for. Thank you so much, Mo. I'll throw that on the screen right now. Thanks so much for booking a call with me. Looking forward to it. You can do what's called a pre-inspection. So if you get permission from the seller, you could actually pay for a home inspection up front to increase your odds of getting the house if you're in a multiple offer situation. Now, this doesn't guarantee your offer will win. So you'll chat with your realtor to see if this is the right strategy for you, but it's one tool in your toolbox that you can still have your inspection and increase your odds of getting a home if you're in a multiple offer situation. Now, I'm telling you as a realtor, I'm not an advocate for, I like to avoid bidding wars when you can. So there's so much I do for clients where we look for off-market deals in so many different ways to source them that most of my buyers can just kind of stay clear of them when they can. But it's inevitable as interest rates dip, and we're going to naturally get to where it's sub 6 soon. when we get back into the fives, we're going to probably see pandemic level competitive competition in certain areas again. And it's going to be a natural like way that you're going to have to think how to do that. And we can discuss how we do that in that situation as a natural. Now, another thing that you can do to not skip your home inspection, if you're in a situation where you still need your offer to stand out, is what's called a pass-fail inspection. So if you're in a multiple offer situation and you found out everyone else made an offer where they have their own home inspection, but you want your offer to stand out, you still want to do your own home inspection, you can do what's called a pass-fail. So you put verbiage in your offer that says, hey, I'm doing my inspection to figure out if I still want your house. I'm not going to come back to you asking for a bunch of repairs. Basically, I'm doing the inspection to figure out if I'm going to take it or leave it. So it tells the seller, basically, we're not going to nickel and dime you. We're seeing if the house is safe, but we're still not going to waive our right to having an inspection, because the inspection contingency is one of the single most important contingencies or protections to keep in your offer, because it's basically the only one you can have in your offer that lets you proactively leave the deal for any reason. It's like your get out of jail free card. It's the have cold feet period, and that's typically about 5 business days, industry standard 1 week. So anyone have any questions on like the home inspection, kind of how that works? Timeline wise, usually what it is as long as you've included in your offer and the seller accepts it, you typically have negotiated that you get 1 week or 5 business days to have a home inspection where you've paid for, you as the buyer get your own home inspector in there, check the house out, and then we have language in there that gives you additional time if your inspector says that you should have any special inspectors like electricians, plumbers come take a look at something and you elect to do that. And then by whatever that day is that we put in the contract, the 5th day or whatever, by 9 p.m. on that day, we get back to the seller with our official response. And if we haven't put verbiage in your offer that states anything about it, what's the cost for a home inspection? And great question. Real quick, again, it's around $400 to $600 is roughly, real quick, the quick and dirty way of saying it. $400 to $600. Sometimes they can go above that, depending on it. But most of those inspectors that charge more, you're not getting a lot more value for those. So like I work with plenty of home inspectors that I can recommend in that $400 to $600 range that do a fantastic job that the $1,000 inspectors are charging. So there are special inspections that you can pay for, like sewer scope inspections that are sometimes recommended on properties that were built in between certain years that have called galvanized plumbing. And galvanized plumbing is a certain type of plumbing where unlike copper or PEX piping, it can corrode, like it only has like a 40-year lifespan. So sometimes you might want to spend a couple $100 on that to get the sewer line checked. But your inspector will recommend that based on the home. I tell people to set aside about $600 for their home inspection. So, and great question. So you could either, like check on Experian, TransUnion website. You can check Credit Karma. Your lender, honestly, one of the lenders I can introduce you to will check it for free for you. So if you're wanting to talk to my lender that does the down payment assistance loan, they can look into it for you as well. And they'll actually give you the most accurate, like tell you what all the scores are. Because there's 3 different scores from 3 different credit bureaus. So great. Fantastic, Ann. Yes. So, Ann, book a call with me. I feel like I could really help you out a lot and we can get you going on the next steps. So Sabrina, good question. Yes. So let's talk about that. You can, if you're going to go through the actual pre-approval process, like if you want to actually get pre-approved, there's no way around not doing a hard credit check. If you don't need to go through a pre-approval process and you're just inquiring, you can do a soft poll. But let's kind of talk about the common misconceptions of that. So when you're getting ready to actually house shop or shop around for a mortgage lender, it's basically one hard pull on your account, and it's good for about 90 days. So the credit bureaus, they'll see it as even if multiple lenders are checking your credit each time when you're shopping around for a loan, if it's done within that timeline or time frame, the credit bureaus see it that you're shopping around for a house, so they're not going to ding you each time that the lenders are checking into the credit. So the best way I describe it, and this is the way I have lenders explain it to me, and I also kind of wrap my head around it, is it's almost like if you've ever gone to the hospital or have a nurse put in an IV line, it's like one tap, the IV line is put in, and then you can put as much whatever fluid or whatever you need into that line while that line's there. So good questions. Okay, so let's kind of move on. I think we're good. Okay, what could be the cost real quick of skipping your home inspection? Your purchase of house unaware of deal breakers. So not trying to gloss over this, but like you risk inherent non-structural safety issues such as mold, radon, and carbon monoxide. Mold sometimes could be a big one. You'll lose your negotiating power because if you skip your home inspection, you're getting rid of your second chance to negotiate with the seller. It's just taking it right off the table. So you want to keep your home inspection contingency in there to either back out or have a second chance to negotiate with the seller if you need to. Yeah. And then just obviously, I mean, even if there's nothing big wrong with the house, it's good to know like what my wife and I called it the honey-do list when we bought our house, because it was like a long list of just tiny stuff that I had to get done over time. And it was good to know what small stuff that I had to work on over time to get my house, since my house is literally built. Interesting fact, my house was born July 5th, 1989, and that's my birthday. So my house was built the same exact day I was built or born. Weird. Yeah, house was built when I was born. Anyways, weird thing to look into, but yeah, my house and I are the same age, so I share that quality with my house. Anyways, moving on. So tips, I forgot about tip 6. Sorry guys. Bonus tip. Okay, don't skip the HOA review period. I'll go through this real quick because I've been going way too long for you guys. I know it's good info. I know you've been staying on. Thank you so much. Again, book that one-on-one link if any of you have to go so we can talk more about this. Watch the replay. Let's go over this final tip. What's the cost of skipping the HOA review period? Now, this isn't going to matter too much if you're buying a single family house, and what I mean by single family is like a detached house, like what you consider a house. But some newer construction or like newer neighborhoods still have HOAs in those communities that have a house. So you still want to look into the HOA, and you want to include an HOA review period if there's an HOA. Because what you want to look into, if you skip the HOA review period, there could be unknown financial risks or health to the HOA. You want to look into how healthy is the HOA. Like, for instance, if it's a condo association where you're buying a condo and it's all grouped together, there's inherent risk there on what the building's condition is in. Because, in a condo, you own the interior walls, but the exterior is owned by the HOA. So if the building is not healthy and the HOA doesn't have a good amount, what's called reserve account set up, where they've collected enough money over the years from the condo owners, they're going to eventually slap a huge assessment on all the owners, and you're going to inherit that assessment. What that means is not only are you going to be paying your normal HOA due, but then you're going to be starting to pay could be a crazy assessment on top of your monthly, like a monthly payment on top of your monthly, could almost double your HOA due just to pay off an assessment to fix the defects that are going on with an unhealthy HOA. So those are things you want to look into. Like, you want to see, is this HOA actually collecting the HOA dues? Like, Are people behind on their HOA dues? These are all things that you want to look into if there's an HOA, and make sure that is healthy. So, yeah, you're you're right. My house was made for me. Yeah. Also, side note, just to let you guys know a little bit, another crazy thing too. My wife and I, we're 5 days apart. So we were born 1980. She's July 10th, 1989. I was July 5th, 1989. We were born in the same hospital. So Sacred Heart in Spokane. And then she moved all across the country. And then I moved to Seattle. And then we went to the same high school. So she actually came back. We went to Inglemoor High School together, maybe crossed paths a dozen times. And then we finally met in college. So interesting. So like our house and us, like weird like stars aligning kind of stuff. Anyways, moving back to this, I digressed again. Okay. All right, guys, I finally am coming to the end besides my bonus. So what are the next steps? Again, I said it. I know I'm kind of beating this with a dead horse or a dead stick or whatever you want to call it. But book a call with me so we can discuss our personal situation. Your personal situation, not my. I mean, I'll share my life with you, like I've just been saying. Get you pre-approved, and depending on your scenario with what we talk about, because not every lender is going to be the best fit for you. So I really do try to make sure that I'm pairing you with the best lender to start with. But just so you know, like, I really want you to get a good deal on a house. And part of that is getting a good deal on your loan and working with a lender that I know, like, and trust, that I've vetted. So hook up with me in the booking a call so I can make sure that I get you with the right lender. Let's get you pre-approved whenever you're ready. And worst case scenario, if you're not ready, because here's the thing, even if you're like, I think I might be ready, my credit score is almost there, it doesn't hurt to talk to the lender and get started with that, because I've had plenty of clients where the worst answer they get is the lender says, okay, we don't qualify for these loans yet, but the lender is actually really good, or at least the lenders I hook them up with are really good at proactively giving them a timeline and actionable steps on how to get there. So like, for instance, last year I had so many clients where my lender gave them the actionable steps, and if they were able to follow it, we had them on like 3-month or 6-month plans where they were able to very quickly turn that around and get into home ownership, versus before they even met with the lender, they were so like thinking home ownership was like years off. So like, that's the worst case scenario, I've had some clients just decide like, we want to save up longer, and that's fine. But like, I think we just need to talk about what your scenario is to figure out what your situation is. And I'm always going to be honest with people based on where they're looking. Because I don't like to sugarcoat things, and I don't like to take people on a wild goose chase. I want to be realistic with you, what our market's doing, where the deals are, what you could buy, what your goals are, what you could probably afford with your budget, and see if we can make it happen. So book that with me. And then once we get you approved, whenever that is, we go out, shop, I negotiate for you, and we get you a good deal, and then I get you the keys. And then I get you to be one of those happy people in those pictures, whether we took a picture of you or not. But, someone that looks like that, right? So, good. Okay, let me move over to the next one. Any questions before I get to my bonus? Since you all stayed here, besides, I think like there was like 3 people ducking in and out, which was totally fine. Hopefully they watched the replay. Anyone? Yeah, Ann, totally. Again though, Ann, like I'd say let's just introduce yourself to me, book with me so we can chat about your, because even if you're not ready to talk to my lender yet, let's have a one-on-one chat about what your home buying goals are. So because if there are some people that I talk to that like after they tell me where they're at, I do say, you know what, I don't think we're ready to have you talk to a lender yet, and that's fine. If but then I can get them on some actionable steps, which either way I'd be happy to chat with you and figure out how to get you into home ownership, you know. That being said, if anyone else has any questions, I want to kind of show you guys this bonus as I cover any of the questions here. Again, I'll remind you, book the one-on-one. You can either scan this right here, or again, I will throw my contact, or I'll throw my booking link one more time in the chat here. Victor, thanks so much, Victor. Hey, I will hold you to it. I'm going to be reaching out to you, Victor. If I don't see a booking link, we'll be reaching out just to check in with you. Okay, Val? Yeah, thanks so much. Yeah, so let me move on here because I want to show you, I want to get you all into this. Everyone that stayed on this and listened to me, if you're renting right now and you're trying to save up for home ownership, I want to help you. And I want to put money behind helping you here. So what is this program, right? So I put a rewards program together for all of my future home buyers and current renters that I work with long-term. Because I work with so many people, like I've been doing this for over a decade, and I'm like, it's getting harder and harder to buy through the Seattle area. How can we help people? So 2 lenders that I've partnered with, I've worked very hard with coming up with a home rewards program that helps them save up towards home ownership where they don't have to be doing all of the savings themselves. So when you join this, it's free. Like, I don't charge you anything, and there's no obligation to actually ever claim these rewards. So if you join this and then ghost me, I won't be offended. I mean, I might be like, man, where'd they go? But like, I mean, maybe let me know. Like, if you end up buying a house years later and not telling me about it, let me know so I can get someone else in here, because I only have limited spots, you know? Like, I have plenty of spots because I want to get people in here, but it's limited, right? But there's a cool program that I can get you into in here free of charge. You just sign up in there, and it's the same info you've already given me. You know, you just need to throw in your name, phone number, and email in there, and you can start tracking your monthly rental payments that you're already making. 5% of it will be tracked each month, where that will go towards a reward credit towards your closing costs whenever you do close, even if it's years from now. Is if you ended up working with me in one of these 2 lenders that either does the down payment assistance program stuff or the mortgage broker that usually saves people almost a whole, you know, a lot of money on the interest rate and fees anyways. So he's really competitive with the rates and fees when people shop. But you can get up to 1% of the loan amount in closing costs. So it's capped, obviously. It's not unlimited. But I mean, this is 1% extra closing costs that's just free to you. That's not going to cost anything, that you could build up over time just by claiming your monthly payments in there and earning, and you can get there quicker by just like watching my YouTube videos and stuff like that. So check it out. So book a consultation with me so I can send that to you. And I'd love to get you set up in there. So hit me up. I'd love to get you into this program. This is why I always show this to people, because it's like, I'm sharing this with you because I want to do the one-on-one consultation to get you into this program. And even if you're not ready for a year or 2, it's never too early to start saving up for home ownership. And this is how I can also help you proactively save up costs, or, you know, save on those costs for home ownership. So you don't have questions, or like, because this is super like niche. Like, the first when I started building this with lenders, I was like, what can we do to help home buyers that's not an actual like not like a loan program, you know? How can I partner with lenders to help them, you know, get into home ownership quicker? So did I explain this enough? Like, does this look like something you might be interested in, anyone in the chat? I give it a second because I think there's like a 5 or 6 second delay from the moment I talk to the moment I get people back. Yeah, thanks. Okay, fantastic. Great. Anyone, honestly, like I will put as many people in here to get free money to help them with the rent. So check it out. Book a call with me. Let's figure out if it's right for you. I'll get you in there, you know, no matter what. You just got to be a renter. Are you renting? You know what I mean? Like, if you're actually renting and you're making rent payments, let's get you in here to start. Let me help you towards your home ownership, you know? So, yeah, so book the call. Here, let me put one more time, guys. Let me put it in here. With my YouTube channel again. It's right there. Thanks, Sabrina. Thanks, Anne. Thanks, Quinn. Thank you, Mo. Okay, Mo, thanks so much. Thanks for booking with me. Thanks so much, guys. Thanks so much for coming. I hope you learned a lot. Sorry it went for almost 2 hours. Wow. I'm going to work on getting this down quicker, but you were so engaging this time around that in so many questions that I think this was good. I think we all benefited from it. So I will talk to you guys soon. So good. Great. Fantastic, guys. I will see you later. I'm going to end the stream now. Anyone else have questions? Any other questions here? I'll leave it. I'm going to stay on for 30 more seconds just in case anyone else has questions. Oh, Victor. Yeah, buddy. You know what, Victor? I've got your contact info. So let me, do you give me, how about I reach out to you? I'll send you a calendar invite, okay? Sound good? We'll get you set up, Victor, okay? Thank you so much. Thank you, thank you. You got it, guys. Okay. Yeah, looks like no questions, which is great, but I'm looking forward to chatting with all of you. Victor, until I send that and until March, please watch my YouTube content. I think it'll be helpful. So good. Thanks so much, guys. Thanks so much for coming. Yeah, good. Okay, fantastic, guys. Yeah, anyone else? Any other questions? If not, I will kill the feed so you can go back to your families. And I will looking forward to chatting with you who have booked calls with me. Let me go ahead and take us out then. I'm going to play my outro for you guys, okay? You ready?